okay? But it's so great to see you guys. And yeah, I mean, a lot has changed, right? We're all reacting to COVID-19. Business has changed. Our personal lives have changed. And we're learning new skills. We're rolling with the punches. And one of the things that I'm actually learning is how to cut hair. And I actually cut my own hair. Here it is.
Wow.
That's the end product. It is not, you know, balanced. It's not exactly faded. It looks a little funny, right? But hey, I'm learning just like everybody else, right? We're adjusting to a new way of living and doing business. Now, on that topic as well, the purpose of this call is to talk about lending, right? And talk about some changes in lending. And lots of changes you guys heard about. And the way that I want to run this presentation, this conference, is talk about a topic. Then once I talk about that topic, take a moment to hear your questions, answer your questions, talk about another topic, and then answer your questions again, right? So we're going to move really nice and slow. Let's jump into it. First thing, let's talk about FHA. FHA FICO score right now, minimum is 640. I priced out FHA today. Interest rate's about 3.875, which is a great rate for today's market. Now here's the kicker. For some FICO scores and for some LTVs, which means loan to value, depends how much a person puts down, right? That's how you get your loan to value. They're looking for reserves now, guys, for a refinance and a purchase. Reserves from 1 month to 3 months. Things are changing constantly. Like the screen right here is changing constantly. I'm not exactly sure what's happening here. But Albert, can you put it back to the way you had it earlier?
Okay, I don't know where this come from. Oh, wow.
Someone is, Sheena Cho is sharing her screen, so you can unshare her, Albert, since you're the host.
Okay.
There you go. Perfect. All right. So reserves, right? We know that we need reserves, 1 to 3 months of reserves. That's the total payment. So total payment, say if it's $2,500, right? So $2,500, put in your calculator, times 3, you're looking at what? $7,500 in your bank account, right? That you need to have in order to close that deal. Let's pause for a bit and take some questions. Any thoughts? Have you guys seen this? I'm just curious to hear what you have to say in regards to this. Now, Albert, are we able just to unmute everybody real quick and just hear them verbally? Can we do that?
Okay. All right, unmute.
All right, guys, go ahead. Did you guys know this? This news to you? Any questions, concerns?
Good, Cosmo.
Hi.
No,
Okay, sounds good. Let's
I went there personally.
Excuse me?
And I get the confirmation receipt. It says the cancel request on February 20, 2020. And it's a paper there. It wrote everything. That's the cancellation number.
I'm sorry, who is that talking right now?
Cancellation number. No, hold on. It's M like Mary.
All right, let's unmute everybody. That's not a question.
Like a boy. R like
Let's move on, guys.
Roger. 008083994.
Okay, I don't.
Thank you. Sorry, guys. We just moved along here. Can you hear me? Can you wave real quick if you could hear me?
Yeah, we can hear you.
Awesome. Thank you. So let's continue. Right now for conventional lending across the board, nothing pretty much has changed, right? FICO scores that they're looking for is 620. The interest rate right now on a conventional is 3.625. Still a great interest rates for your people who have to buy. Now, again, they're looking for reserves. They're looking for reserves for a refinance, and they're looking for reserves for a purchase. Same thing as FHA, 1 to 3 months, right? So whatever that payment is. Some of your clients, guys, they will not have to have reserves. If they got a great FICO score, or they're putting down a little bit more, or they got a lot of equity in their property, no reserves, and we're good. Other thing, jumbo loans. Jumbo loans are almost just about out of the market, guys. For some people, we can make it happen, right? Now, you're going to have a FICO score at least above 750, and you're going to have around 20% down to do the jumbo loans. This is the other thing about this, is that things are changing constantly with lending, and just keep that in mind. So this is an open conversation that we're going to have as we go along here. Jumbo rates right now is about 5.125. So let's go ahead, and should we unmute? How should we take questions, Albert? Should we just
I think they can type in the chat so I can read it to you. Otherwise, it's a lot of background noise.
Yeah, I agree. Good idea. So we'll pause right there for a little bit. Any questions?
So far, no question. Oh, there's one question. Is rental income still considered?
That's a great question. Depending on the loan to value and depending on the FICO score, it will be considered and it will not be considered. So some people right now are basically being told, the people who have FICO scores under 700, that their rental income is not considered. So it's on a case scenario. So if you guys have a case that exactly you want me to look into, I'll look into it. What is the current VA rate? Is that the question?
Correct.
Okay, what's the current VA rate? It's going to be the same thing, like a FHA rate. It's going to be around 3.875. What's the other question, Albert?
I thought already stopped lending. The banks are not approving such loan. That's what Michelle Lin was asking.
Okay, Michelle Lin, that's a great question. A great statement. Now, I work for independent broker, right? What does that mean? That means that I'm not Wells Fargo, I'm not Bank of America, I'm not the direct lender down the street, right? I'm a broker. I'm able to use different programs to get your guys' loan approved. What I'm saying is really different compared to a lot of other people, right? There's some people at the big banks. FHA is a minimum 680 FICO score. So please remember that not all lenders are the same, right? I pride myself in being very flexible, and the people that work with me know that, right? I do non-QM and I do everything that everybody else does, which is what? Conventional jumbo. What's the other question, Albert?
Okay, a lot of mortgage brokers still taking and utilizing the first-time home buyer program. Also, if you want to raise your hand, you can use the raise hand button, and I will unmute you. You can ask a question that way too.
Got it. And so, I'm sorry, the question, what was the question? Okay, I see here. A lot of mortgage brokers still taking and utilizing the first-time home buyer program. Yes, they are. We're still doing that. How do VOE right now? How does the VOE work? That's a great thing that we're going to talk about. We're not going to talk about that right now. We're going to talk about that a little bit later. So yes, to answer Leon's questions, are brokers still utilizing first-time home buyer? Yes, we are. The down payment assistance program still exists. Right now, the people are taking a hard blow, Leon, are the government loan people, right? That's FHA, that's VA, that's the USDA loans. They are the ones that are starting to pull back from the market. That's what we're seeing right now. Why are all these changes happening? Think about it like this, okay? All the banks that you guys know, all the lenders you guys know, every time they get a deal, they have to sell the deal on the secondary market. Right now, people are not buying that deal. Investors are not buying the deal from the secondary market. Why are they not buying those loans on the secondary market? Because of the huge amount of what? Unemployment. And the fact that the industry is really just volatile right now. That's what's happening. I will say this, we are predicting that this will in time pass, right? Hopefully this is temporary, and I believe it is. I think that we probably should be back to business towards the end of the year. And I think next year will look a lot better for us. But for now, we have to adjust to our current environment. Okay, so we're going to talk about how appraisal is working right now. Yes, we are going to talk about that. Let's just move on. Okay, so on my list here, appraisals. So we'll stop questions right now. And now I'm going to talk a little bit about appraisals. Now, appraisals, this is really relevant to you guys, right? So Fannie and Freddie, I have been willing not to make the appraisal so difficult because of COVID-19, right? So what do I mean by that? They are being willing to take desktop appraisals. Say you have a purchase right now in the city of Monterey Park, right? And you're saying that property is at $600,000 or $700,000, right? Once we put the application to the system, if it qualifies for a desktop approval, you're going to get a waiver, and it's going to say, hey, based on what we figured, the comps that we saw, this property is around $600,000, $700,000. Here goes your desktop appraisal, and the appraisal is waived. Now, how much does appraisal cost, right? It costs $470 up to what? Around $770, right? A lot of money. Now, if you qualify for one of those waiver appraisals, you're going to pay about $250. And that's awesome. Okay, let's move on to a different form of appraisal. Now, let's just say that there's not enough data to support that, right? Okay, well then, some of you guys have heard of a drive-by appraisal. What does that mean? That means that somebody literally get in their car, you drive to the property, you look at the home, and then they take pictures outside. They don't bother anyone at the home. They take pictures, and they say, okay, got it. Now we go back and we analyze these pictures, and yeah, we see where the value's at. Okay, great. Now what happens if that's still not enough? They're going to do what I call soft appraisal. Now they're going to go into the property. They're going to take pictures of the property, and they're going to move forward from there. Now, say you have a client who says, or we're doing a deal, right? And let's just say that the property is valued at $600,000, and we're making the argument that, hey, it should be $600,000 because the renovation that has happened in this home, the kitchen's new, the bathroom new, the living room, what have you, right? Okay, now we're rolling out something called a virtual appraisal. Now that, guys, is not that all lenders don't have that. We have it. What does that mean? That means that now they're going to call the client, or they're going to call the agent. So either the client or the agent could basically get on their phone, do a FaceTime like we're doing right now, face to face. The appraiser is going to tell them, go to the room, take a picture of that, take a picture of this, upload it here, and we're done. You do not need to download an application to take advantage of that virtual appraisal. Okay, other thing, let's see, virtual appraisal. Okay, we still don't have enough data to support that value. They're going to have to go out to the property and do the traditional appraisal. Here, where you guys come in. Now, some realtors have been guilty of overpricing properties, right? This is the time, guys, that you do not want to overprice a property. Why? Because getting appraisal waived, that's not going to be your option. Getting the drive-by appraisal, that's not going to be your option. You're going to have to do a traditional appraisal, right? So what I say, your part is that you please remember is to please make sure that you price your properties accordingly, right? And remember, when you do price your property, we're all using the same information, right? It's all out there. I run comps too, right? And I'm a lender. I look at the comps for a refinance. I look at the comps for a purchase. So with that, let's take questions. How's the refi market these days? It's good, the refi market, because rates are still good. I'm closing the deal right now. Interest rates are around 3.25 on a 20-year. That's insane. That's a great rate. Client's selling his he's consolidating his condo in Monterey Park. He owes about $200,000 there. Interest rate right now is around 6%. And now it's going to be at a 2.5%, lower than what his rate is on his primary already, saving a lot of money. So let's see what else. What's the home equity loan market now? Home equity loan market, are you referring to the non-QM products, the non-traditional mortgage? May? What do you mean the home equity loan market? Borrower has a 25% 3-month cut in salary. Will lender qualify his base on the original? No, they will not. Definitely something like that, they will not. Sheena, they will not. Want to talk about how appraisal is working? Yes, we talked about appraisals. Traditional single house. What's the home equity now? Traditional single house. Well, I don't know what you mean by home equity, but pretty much those are the comps, right, of the property. I don't know if someone knows exactly what she's trying to to ask here, but I'm not quite sure. So any other questions? Line of credits, I don't do line of credits. Sorry. You have to talk to a banker, Wells Fargo, Bank of America, business banks. Anything else about appraisals, guys? If not, we're going to move on. Turnaround time, that's a great question. Turnaround times for refis are 20 to 25 days. Purchases are 30 to 45 days. And I'll talk a little bit more about that once we end this this conference. Okay, so let's move over to VOEs. Okay, what is a VOE, right? Verification of employment. This is big right now, guys. A lot of people are experiencing this. Maybe you're in escrow right now. Maybe you will be, tomorrow, a week from now, who knows, right? VOEs are basically VOEs is when they check their employment, right? To verify that you actually work at that company. Now, what has changed is that they're checking the verification of employment right before closing or the date of closing. The reason why they want to do that is because they want to make sure that your borrower is still, or our borrower is still employed. If they do not verify that the borrower is still employed, they will not fund the loan. It will not close. Why do you have to have patience and talk to your clients about that? Because everything has changed, right? Everything is slow. Escrow is taking more time. Title is taking more time. People that are not in the real estate business, they're working from home. They're taking more time to get back to us, right? One thing that my company has done to make things easier is that we allow companies or whatever employers that they're working for to send us an email. As long as we have say Kaiser.com or what have you, that is coming from a trusted Kaiser email or whatever you could think of. They send that to us. We could clear the VOE and we're done with that. Someone mentioned VOEs. Let's go to questions now. Did I answer your question? Do you have any other questions in regards to VOEs?
Hey, Cosmo, I have a question.
Uh-huh.
I know with like direct lenders, they do something a little different from like banks, people who are in lending. I was wondering for those who have escrows or just open escrows already with lenders who are like big banks like Chase, Wells Fargo, Bank of America, like what are they doing to make this the transaction a smoother process? Because I know, with direct lenders, such as yourself, like a broker, it's, they have ways to go around appraisal and things like that. But I was wondering, do we have any bank lenders on the phone who can kind of talk a little bit about that, like what they're doing as well?
Yeah, I think what we're doing to make this is the virtual appraisal. That's one thing. The VOE, that's the other thing. Go ahead.
I didn't say anything.
I don't know, someone was talking, but yeah, so that's it. Karen, I don't want to open it up right now to other lenders. I just want to keep this timely, and then we could move forward from there. But I mean, you guys are welcome to stay on the chat and talk with other lenders if you would like, but we're just going to move on for the sake of time. Thank you. Okay, so let's talk now about forbearance, right? Now, it's really important that you guys explain to your clients in regards to forbearance that when we first heard it publicly, right, from the politicians, they made it sound like it was the best thing, right? They're saying, hey guys, we've been talking to the banks and they're going to be willing to work with people in regards to making their mortgage payment, people who can't make their mortgage payment. Well, that's not exactly true. Why? Because there's some lenders, depending whoever has your mortgage, and this is important for you guys to explain to them, that will not, allow them to do a forbearance. They're going to tell you, hey, this is the payment. If not, you're going to start the process of going to default and into foreclosure. Now, there's some lenders. The more popular one is this, right? For example, say your monthly payment is $3,000 a month, right? Okay. Some lenders, it's a very common one, are going to say for 3 months, you do not have to make your payment. So 3 times 3, it's 9,000. Once those 3 months, they're going to have to pay that $9,000, right? So remember that. Now there's some lenders who are allowing people to actually not make that $3,000 payment, but they're going to put it towards the back of the end of the loan, right? Which basically means after 3 months have passed, you're just going to make the regular payment like usual, right? Now, what's important about that is this, that those lenders, because you have officially breached your contract, right? They could refer you to the credit agencies and your FICO score could drop, okay? I know a lot of you guys are smart people. I know a lot of you guys knew that, but maybe your clients don't know that, right? Maybe your friends don't know that. And it's really important for you to explain that to them. So in wrapping it up, a lot more to talk about, right? We're scheduled to talk for an hour here. My time is just about done here. So the reason why we're on this call is because I'm asking you guys to help me set the proper expectation, right, with the clients. Somebody asked about refis. We are turning refis over 20 days to 25 days, right? Purchases. We're turning purchases over from 30 days to 45 days, right? This is I know us in the real estate business, we want everything done yesterday, right? But now I'm asking you guys to have patience and write those purchase contracts no longer for 21 days, right? Put them for 30 to 45 days. Also, I am Cosmo Sanchez, New Ink Funding, right? There's a bunch of lenders that do a lot of other things, right? So just know that I don't claim to talk about how lending is for everybody, right? It changes. If you guys have a lender that you're confident with, just make sure that you're in clear communication with them. So we're gonna take last questions, and then my part is done, and then Oriana would do her share. So let's just see what we have here. Okay, business shut down temporarily due to COVID-19. Can't complete VOE. How is approved loan under those circumstances? You know, honestly speaking, you're just gonna have to call the company. That's all you could do. Just try your best to call and contact the property. If the VOE is not clear, they will not fund the loan. That's where we're at. Business shutdown temporary. Okay, that's done. What about borrowers who are realtors or independent contractors? What do they check for before COE? Well, basically, they're just gonna check. They're gonna call you guys. Everything is gonna be on a specific case. For example, some people who are self-employed, lenders are reducing their income. Why? Because they're projecting that there's not going to be no business for this company, right? This specific company, whatever it may be. So self-employed people are taking a hit right now too, right? If you're not what society seems an essential business, then the underwriter is going to say, well, it's only so long that this restaurant or whatever it may be is going to be unable to have this income. So stuff like that, again, is on the case basis. Let's see some more questions here. Again, HELOCs, home equity line of credit, I don't do that. You have to talk to a business banker with that, or someone who works for the big banks like Wells Fargo or Bank of America. Jumbo loan lines of credit using a reserve loan. No, we're not doing that. I don't do that. Again, talk to the big banks, Wells Fargo, Bank of America. Yes, forbearance will affect a client's ability to refinance, but the best thing to do in those case scenario is to talk to the client exactly why it was, and you really just tell a story, right? Whenever we do a refinance and whenever we do a purchase, some things come up on the credit report, and me as a lender, I get the story from the client and I help tell the story. So there's a possibility that you could still do a refinance even though that you know you're in forbearance. We'll be doing another meeting. Thank you, Robert. Yeah, we'll be doing another meeting. We're going to be doing a meeting bi-monthly, so 2 times out of the month. Reverse mortgage is still available. Yes, it is. Yes. Okay, Richard said that he's doing them. Awesome. I do them as well. So that's pretty much it, guys. And yeah, we're in this together. One thing too that I want to leave with you guys is that you know, we're always trying to get the loan approved, right? Just know where the market's at today. We got to be very careful with that, right? We get a loan approved and it goes into forbearance, or people are unable to make that payment, then we really didn't take care of the client, right? It starts with us as lenders. It starts with you as realtors to be educators into how protect your clients and also how protect our industry, right? This is not 2008 again. It's not because of reckless lending that we're in this situation, right? We're in this situation because of COVID-19. It's our opportunity to show people that we really care for them and that we really want to help them close their deals. Sorry, Oriana, I know I went on a
No,
little
that's
longer,
okay. That's
but,
great information.
but I'm all done. And Oriana, she's also a colleague and a residential lender, just like me. She does everything I do, guys. Please use her as a resource as well. And I'll go ahead and hand it over to you, Oriana. Thank you.
Okay, thank you, Cosmo. That was great information. But what I'm going to talk about today is going to be a little bit about the relief. How do I get my screen up? Albert, you need to help
bring
me.
up screen right now.
I'm computer illiterate. Okay, so I'm going to talk a little bit about the Small Business Administration. So how do I get to the next screen?
I have to control it.
Oh, okay.
Just
got
tell
it.
me when to click.
Okay, so I want to start from the beginning and just explain a little bit about who is and what is SBA. So SBA was established back in 1953 by Congress to provide financing assistance. There's SBA 7, and which is the purchase of commercial property and businesses. Then there's SBA 504, which is just general business. The eligibility, you have to be a business for profit in an operating business, be located in the United States, be small under SBA size requirements, applicant affiliate, credit not available elsewhere. So this is a biggie, and I want to talk a little bit about this. If you can walk into any bank and get a loan, then this loan is not for you. It's for people who can't qualify anywhere else. So 51% owned by US citizen or LPR. Next slide, please. Okay, uses of loan proceeds. It's for commercial real estate acquisition, construction, leasehold improvement, equipment inventory purchase, business acquisition, business debt refinancing, and working capital. Next one. Loan amount and loan term. So the maximum loan amount is $5 million. Maturity is up to 25 years, fully amortized. Interest rate is by the Wall Street Journal Prime, which is like 3.25 today, plus margin. SBA guarantee is 85 to 90%. SBA guarantee fee is 2% to 3.75. And it requires personal guarantee and collateral. Next, please. So I want to talk a little bit about the SBA disaster loan, which everybody knows right now as the economic injury disaster loan. Next. So what businesses are eligible to apply? So it's small business, any small business, mom and pop shops, small agricultural cooperatives. So I'm thinking small farms as such, wineries, small aquacultural, so fish farms, pearl farms, and most private nonprofit organizations such as churches. Business located in a declared disaster area. So we're all, you don't have to worry about that because we're all in this disaster area. Credit not available elsewhere. So you can't just walk into any big lender or bank and apply for a loan. Less than 500 employees or under SBA industry size standard. Next, please. So loan amount and loan term, you could borrow up to 2 million. 10,000 is an emergency grant, so that's like free money. The interest rate, small business fixed is at 3.75, nonprofit is at 2.75, and you can go as long as 30 years. Next, please. And what the funds are used for. It's used for working capital only. So that means your rent, payroll, utilities, insurance, long, short-term debt, and payments. It cannot be used to pay bonuses, stockholder loans, to buy assets, or expand your business. The guarantee and collateral. Personal guarantee. So if you own 20% or more of the business, provides personal unlimited guarantee. So collateral, which is loan amount greater than 25,000, they want business assets and real estate if it's available. How to apply. You don't have to go through a bank to apply for this. You can apply online. It's a streamlined process and it's supposed to be simple. So if you go on online, it should prompt you to the next page. Next. Okay, then, okay, all right. So the next one is by the CARES Act, which is the Coronavirus Aid, Relief, and Economic Securities Act. This is the Paycheck Protection Program. So what eligible businesses and period? You have to be in business before February 15th, 20. Less than 500 employees or under, SBA industry standard as small. Nonprofit described by 501c. Veterans described as under section 501c. Tribal description section 31b. And the loan, you have to have a loan number before June 30th, 20. It doesn't have to fund, but you have to have that loan number. Okay, so the loan amount, how they have a calculation. It's 2.5 times of the past 12 months payroll average from January 31st to April 3rd. Advance amount of 10,000 and goes up to 10 million. Use of the loan proceeds can be for payroll cost, interest payment, rent, utilities in force prior to 2/15, refinancing of EIDL made between January 31st, 20 and April 3rd, 20, used for payroll costs. Interest rate is 1%, which is great. And the maturity date is 2 years. Collateral and guarantee, none. You don't need any collateral or guarantee. So they have payment deferral. So automatic deferments of interest deferral for 6 months up to 1 year. Now the first 8 weeks of principal and interest could be forgiven. 75% of funds used on payroll cost 8 weeks after loan date. 25% is other business relatives or related, actually. How do you apply? Through SBA certified lender, which is me. We could start taking applications now. So the documents they need is payroll cost summary, payroll tax filing, utility bills and payment evidence, business entity document, and other financial information. Usually they want at least 2 years of your tax returns. So this is the comparison that we made up. And we can do both loans with our company. There is a cost though. We help you with all the paperwork. It's about $1,500. If you only want to do just the PPP, what our company says is that they take a deposit of $800, but as soon as the loan goes through or it's denied, it's refunded. They just don't want you shopping around, basically. So I'm open for questions, and that's it for me. Okay, I see. How does government know whether you're even spend on the allowable use? Or what? I'm sorry. Okay. How does government know whether your emails don't spend on level used or not? Or something else? Do you need to document your spending? Yes. I mean, you get audited. Not everybody gets audited, but they go by the honor system and they just want to trust you. But if they audit you and they find something wrong, I mean, you know, they could call the loan due, or you could get a fine or imprisonment or both. Then I have AIG, happy birthday. Thank you. If I have an employee that I pay 1099, does that qualify for PPP? Yes, actually. Eric, here's the only application site. Oh, perfect. And 1099 works does not count as employees. However, if self-employed sole proprietor commission counts as your payroll. Yes, it does. How does government know whether you're doing, okay, you're spending. And we answered that one. And I think that's it. But yeah, I mean, you never want to defraud the government. They don't know what you're spending it on. If they approve you the loan, they give you the money in good faith. But if they ever audit you, you know, you could get fined or imprisonment or both. Let's see. Do residential landlord qualify? No, they don't. What if you are, let's see, what if you are not 1099 that you pay? I don't know what that means. What if you are not 1099 contractor that you pay? You have to elaborate on that one for me. Is self-employment for PPP? I think if you're a broker real estate and you do pay other people, you do qualify. It's payroll. So if you pay someone in a payroll, you do qualify. Yes, you could apply for both. Can we apply for both? Yes. How long came from EVL after I apply? Right now, there's a lot of people applying, so I can't answer you that right now. I don't know anyone right now that got funded yet. So, does it hurt to apply and wait to see if you get approved or rejected? No, it doesn't hurt. I encourage you to apply. Let's see, if you are a real estate management company and you pay vendors like maintenance, yes, yes, you could apply. Can you deny if you got approved? If you're approved, you're approved. They can't deny you after that. Do I apply myself? I have my accountant apply. You apply yourself. With PPP, we have to bank. What do you mean? SBA, we go to the website. You can apply both directly with me. But if you, I mean, you don't have to. you know, the disaster loan, they have a website and you could do it. But with us, we help you with the paperwork because they do ask for a lot of the paperwork, and sometimes customers don't know how to fill it out. We have a division, a commercial division, actually will help you. You get assigned to one of our commercial loan officers, and they will help you through the paper process. We have a whole team doing that right now. Can you share us the rate page again for PPP? I don't have, oh, the rate for PPP is 1%. The disaster is 2.75 to 3.5. Will SBA let me know if it's approved or not? Yes, they would let you know, definitely. And I don't know right now how long it takes. They say a week, but I don't think it's a week. I don't, like I said, I don't know anybody that funded yet. I know Eric Wu said yesterday, he sent out something in YPN stating that they are taking full applications. right now. But I mean, the regulations are changing daily, sometimes several times a day. So
Eric's will raise hand. Let me undo him. Hold on.
yeah,
Sorry, I have to look for him.
okay.
Oh gosh, where is he? We have over 100 people.
He's
logged in.
he's the funny looking guy with the red cap on.
He has the red cap on.
Yeah.
Yeah, but
He's
it's
not
on
he's
the
not
list. I have to look.
he's not
for
as
him.
handsome as me, but you think he is, but
Can everybody hear me?
Okay, here we go.
Hey, hi everybody. My name is Eric Gu, and I'm a affiliate member here with the West End Gabriel Valley Association of Realtors. With regards to PPP, through my research and my contact, there's two sets right now. Those are the actual business owners and versus self-employed and sole proprietors. For the business owners, 500 employees or less, the application process had already begun last Friday, and they've been taking applications since. But for the most of you who are 1099 self-employed realtors, there was one of the questions as to whether or not you can apply for it. The answer is yes. You as you're self-employed and you are eligible, but the application period is not available until tomorrow. I'll send a link in the website on the chat about that, verifying that as a 1099 self-employed realtor, you are qualified. And they specifically says your commission in this instance counts as a payroll. Again, this program is meant to cover the losses of your payroll, and as a self-employer, your payroll counts. So I just want to make that clarification. You can qualify, but it won't start until tomorrow. And as for the economic disaster loan, it's available already. Like you said, you can talk to Oriana about signing it up. You can also go directly on website to sign up for it as well. My brother, who's a realtor, I help him sign up for the EIDL directly through a website. It's a fairly quick process. For us, it was only like 15 minutes to apply. But we're still waiting for a response as to whether or not we're approved or whether or not we still need more information. So that's kind of the gist of it. I just want to add my 2 cents about that. So.
Thank you, Eric. Okay, they want to see that rate page again. I guess the comparisons. Can you put that up,
Sure, I can.
Albert?
Yes.
Oriana, before we disconnect, make sure you share your contact information. A lot of people want your contact info. So make
Okay,
sure.
we go back to the first page, but let's.
Yeah.
This is the one.
Yeah,
Right?
Mhm.
this is the difference.
Okay. Any?
And then my contact, my business card page. Yeah, you can either call me or email me and I'll have more information for you.
Take a picture of her information. Write it down. Mary, not sure what you're asking, but yeah, there shouldn't be a cap. I don't know if that is that question for oh, I think it's for Oriana. Yeah, Oriana. You see that question from Mary there? I think that applies to you.
No.
Uh-huh.
Okay. Okay. Well, they look at your payroll summary. So on the PPP, whoever applies for the loan as for income, they want to see the payroll summary. Yes, the 1,500. If you qualify for the loan, I believe you do get a refund. You get that money back.
There goes my contact info. Feel free to call me. Thank you guys for being here. I think, Oriana, what do you think? I think we're all done.
Yeah, I'm all done. Thank you very
Okay.
much, everyone.
You guys are awesome. Please, stay in contact with your lenders. Make sure you're communicating with them. And thank you for taking the time to be on this call.
Yes, thank you.
Bye-bye.
Bye-bye.